Hello traders, and welcome to our second lesson on the Smart Money Concepts course. So this is lesson 2 of our course, and in this lesson I'll be breaking down candlestick patterns that you need to know before you can place a trade. So these candlestick patterns can be found at major key levels or at the higher lows in a bearish market and lower highs in a bearish market and higher lows in a bullish market. So we only have three types of candlestick patterns that you need. So we have what is known as the bullish engulfing, so that is called the bullish engulfing. That is the body of the candle, the top, those are the wicks of the candle. So in a bullish engulfing, that is the pattern that you have. Bullish engulfing. Whenever you see that candlestick patterns, that means that is a confirmation for you to place a buy, because sellers were in control. However, these buyers engulfed them. So in simple terms, that means this candle, these small candles being eaten up by this larger candle. So that is a bullish engulfing. And then in a bearish market, we are going to have a bearish engulfing. The bearish engulfing, that is a bearish engulfing. That one is to indicate that now sellers are in control and they are ready to move. And then we have what is known as the tweezer bottoms. Tweezer bottoms. So for the tweezer bottoms, you basically have two candles that are equal in height. So the body of the candles are equal. However, the wicks of the candle can be different. What is important is to note the body of the candlesticks. They are always at the same level. Same applies to the tweezer tops. So the only difference is that the positions where they are at. So in a bearish trend, our tweezer tops can be found at the lower highs, because that is where we sell. And then in an uptrend, our tweezer bottoms can be found at the higher lows. And then we have what is known as the pin bar or the rejection candlestick pattern. In a bullish, that is how the candle looks like. That is the bullish pin bar. So that long wick, that one is the one that indicates a rejection. So this is a signal that the buyers are now ready to move up. And then we have the pin bar in a downtrend. So in a downtrend, it's the opposite. So in a downtrend, that is what we have. The wick is a bit longer at the top. So that wick at the top, that is to indicate the sellers the buyers are rejecting the price, and then now sellers are ready to move in. And then we have what we know as the doji. So the doji candle is also known as the indecision candle. So when you see a doji, you need to keep in mind that that means the market is indecisive. So the doji, that is how it looks like. The doji is an indecision market. That means no one is in control, neither buyers or the sellers are in control. Therefore, you need to wait. You need to wait for a confirmation for any of these three candles above to form. Now together traders, so now that we know the candlestick patterns that you need to look out for, now we can go to the chart and learn how to plot them. So let us go to the charts. First of all, we begin on the daily time frame. So on the daily time frame, this is VIX 75. Following our strategy. So from here, we have an uptrend where we are forming higher highs and higher lows. So you go to insert, higher high, higher low. You can see the pattern which was formed there. It is the tweezer bottom. Why? Because the body of the candle is at the same level. And when that happened, when that candle formed, what happened? Price moved up to the other side, to the upside. And then we have a higher high and a higher low. In a bullish trend, we buy it at the higher low. What pattern is that one? That one is it's a bullish engulfing. What happened when that pattern formed? Price moved to the upside. We have a higher high, higher low. What pattern do we have? We have a bullish engulfing because this candle has been engulfed. And then we have a higher high, higher low. What pattern do we have? We have a bullish engulfing. And then we started forming lower lows and lower highs. So price reversed, and then we are now in a downtrend and price is forming lower low and lower high. What pattern is there? The lower high, that is the tweezer top, because the body of the candles are at the same level. We do not look at the wick, we just look at the body. And then we have a lower low, lower high. What pattern do we have there? We have a bearish engulfing. Lower low, lower high. What pattern do we have? We have a bearish engulfing. So price is ranging at this level. So for this one, price is ranging between these two levels. So what happens when price gets at the resistance? You are seeing a bearish engulfing. That is a sign for you to sell. And then what? That pattern, that one is a tweezer top. And then price is at this support. What pattern is that one? That one is the bullish pin bar. We have a bullish engulfing, and then we have a bullish engulfing. Let's go to the 4 hours. If you can be able to see some other patterns. So price was buying here. What do we have? Higher high, higher low. What pattern do we have? We have a bullish engulfing. Higher high, higher low. Pattern do we have? We have a bullish engulfing. So that is how you can be able to identify these candlesticks. They always form at major key levels, or at the higher lows in a bullish trend and lower highs in a bearish trend. So if we go to volatility 25, you can be able to see that price is in an uptrend because it's forming higher highs and higher lows. So let's see, we have a higher high, we have a higher low there. What is forming at this level? This is basically support. So what do we have? A bullish engulfing, higher high, higher low. We have ourselves a a tweezer bottom, higher high, higher low, tweezer bottom, higher high, higher low. There we have a bullish engulfing, and then we have higher high, higher low. What do we have? We have a doji. So when you see a doji like that at a key level, you always have to wait for a confirmation for either of the three candles to form either a bullish engulfing, tweezer bottom, or the bullish pin bar. So in this case, we had a doji, and then what followed? The bullish engulfing. And then let's go to 4 hour. You can also be able to see these patterns. So we have the higher low, we have a doji. Price is indecisive. You wait for a confirmation, which is that candle. That's an indication price is about to go to the upside. And then let's go to volatility 25. So we were in an uptrend. Price was forming higher highs and higher lows. So we had higher high, higher low. What followed? The bullish engulfing. Higher high, higher low. What followed? We have ourselves a doji. So if you see a doji, always have to wait for a confirmation, which is the bullish engulfing. And then we have a higher high, higher low. What did we have there? We have a tweezer bottom, because the bodies of the candles are the same. And then we're trending downwards. Following our strategy, which is the SMC strategy, we need to break structures to the downside. So now we are in a downtrend. If we go to the 4 hours, we can be able to see our confirmation candles. So from there we have the lower low, lower high. What do we see? We are seeing a doji plus the confirmation being the bearish engulfing. So that doji has been engulfed. It has been engulfed, and then we have the lower low, lower high. What do we have? We have the bearish engulfing, lower low, lower high. We have the bearish engulfing, lower low, lower high. We have ourselves a bearish engulfing, lower low, lower high. We have ourselves a bearish engulfing, lower low, lower high. What pattern is that? That one is the tweezer top. Why? Because the body of the candles are at the same level. That is how you can tell. We have lower low, lower high. We have a bearish engulfing. So that is a bearish engulfing. That is how you can be able to tell. Those are the candles that form the most in the Forex market, and those are your confirmation candles before you can take any entry. So in the 1 hour, you can see that one is a bearish engulfing, lower low, lower high. Price was acting at that level. It went back, it went at that level for the first time. It formed a tweezer top, went back in again, formed a tweezer top. And then let's go to volatility 100, 1S. We have lower low, lower high. That one is a bearish engulfing, lower low, lower high. What do we have? We have a bearish engulfing, lower low, lower high. We have a bearish engulfing, lower low, lower high. What do we have? We have a tweezer top, lower low, lower high. We have a bearish engulfing. and then lower low, lower high. What do we have at this level? We have a bearish engulfing, and then price went back into the same level to form a tweezer top. And the candlesticks, they are always the same in any market. If we go to Euro USD, this is a currency pair. You can be able to spot the same candlestick patterns. So price is moving in an uptrend. So if we check, that is a higher high, higher low. What happened at this level? Price formed a bullish engulfing. Higher high, higher low. What happened? Price formed a tweezer bottom. Higher high, higher low. We have a tweezer bottom. Higher high, higher low. We have ourselves a tweezer bottom. And then what do we have? Higher high, higher low. For that one, it's not clear, but if we go to the 4-hour, you can be able to see higher high, higher low. What do we have? At this level, we have a bullish engulfing. Bullish engulfing. So that is how you can tell. And then let's do the last one, which is gold. Same applies. Higher high, higher low. What do we have? We have ourselves a bullish engulfing. Higher high, higher low. What do we have? We have a tweezer bottom. Higher high, higher low. We have ourselves a tweezer. Sorry, that is a bullish engulfing. Higher high, higher low. So we have ourselves a doji, and then wait for a confirmation for price to confirm that it's moving up. And then let's go to the 1 hour if you can be able to see. So price is in a downtrend. What do we have? Lower low, lower high. We have a bearish engulfing. Lower low, lower high. What do we have? We have a bearish engulfing. We go to the M30. That candlestick pattern we marked showing on the M30S is a bearish engulfing. So that is how you can tell traders. These are the only candlestick patterns that you need to know for you to be able to be successful. So that is all for lesson 2, traders. If you did get something out of this video, please do give it a thumbs up and drop a comment in the comment section, and I'll be able to reply to your questions. If you have any other questions, drop it in the comment section. So that is all, traders. See you in the next video.